Hey, happy Thursday, everybody. Welcome to the morning market update. First thing I wanted to start off with is Aptos. One of the reasons why I'm looking at Aptos is if you kind of go back to maybe like a 3-day chart, right? I think it's a 3-day or maybe it's a 2-day chart. Let me see this real quick. I had spotted some bullish divergence. I forgot exactly where it left off. Shoot. Let me see here. Not this one, I think. Yeah, I mean that's a 4-hour bullish divergence right there, where you have, higher lows and then clear lower lows on the RSI. But I thought I spotted it on a higher time frame. When I find it, I'll get back to you guys. But point is that what I was looking at in terms of Aptos was simply that this asset had a pretty monster run up from December all the way till maybe the first 2 weeks of January, right there. And that was about a 500% move. And then if you kind of do like a low to high fib pullback, we are right there at the 618 fib, right? Because we went all the way to a high of $20 and some change, and we came back and pulled in all the way to $9 and some change. So now we're kind of sitting at this $9 level. And what seems to be happening here to me is maybe a potential, exhaustion in selling, and you may get, squeezed up back to the 50 fib, which is, 1175, and, quite possibly higher towards maybe like 14 or 15 bucks, which is the highs of these guys right here. So that's something that I'm looking out for. Aptos, I still kind of need to see strength. Right now, what I've talked about is still maintaining my spot position on Solana, as well as my blur position, which is still averaged in from 75 cents. So, again, real quick, right? Solana, I am slightly underwater on that trade. 22.7-ish is my entry, and 22.2 is where we are. So really not down all that much, like 2 to 3%. But Solana is one of those investments that I can honestly like hang on to for a while, simply because I've sort of done my research. I know the Solana community of developers and builders, and all the things that are happening on Solana. I pay close attention to it. This is the point, right? So when you've done your fundamental research in an asset, you kind of want to stick with your bet for a longer period of time. Now, if I'm wrong and Solana just goes to zero or goes down, maybe another 90% from here, but then I guess either I'll buy more or I'll just sit on my hands. That's kind of the risk that we all take, which is that we don't really know where the bottom is. You just kind of do your best to pick out good assets. Okay. Blur is the other position that I've talked about before. Again, same thing for me. Blur is deep, a little bit deeper underwater than my Solana position. You can kind of see, right, averaged it in around 75, some change, currently down about 22%. Now, again, I know that seems rough, but both these positions, whether it's Blur or Solana, and I've held like ETH spot or a Bitcoin spot for several years, and I averaged down through multiple cycles for both. But these positions, like when it comes to Solana and Blur, I see them kind of in line with BTC and ETH, which is that you want to think more than like a few weeks or a few months, right? If you really sort of have done your due diligence in the asset, I'm thinking, maybe a year or two, right? And again, this is not investment advice. You do whatever you want. I already told you my entry point. I told you my, position sizing in the Discord, right? That is what I'm sticking with. If you don't believe that, then you could just short it. You could be on the other side of the trade, right? The issue right now, and this is where we kind of get into the weeds of things, okay? I want to show you guys one thing, which is, so let's go to our friend, not really my friend. I just know the guy. I think he's pretty smart, right? Here's something interesting. Okay. That's a fake account. Colorado. Travis. This one? I just think I had it. There it is. No. There it is. Okay. So, all right. So here's something incredible. Okay. First things first, right? If you look at this morning, okay, we have once more sort of a contagion of banking sell-offs and failures that are happening in the United States. Okay. The best way to look at regional banks is KRE. This is a regional bank ETF. If you look at the regional bank ETF, that shit does not look good, right? It's already down, pre-market open. Okay. What this is telling us is there are serious failures that are happening within the banking sector, and we should probably be concerned. Now, the Fed yesterday basically stated that, they're really not concerned, right? They kind of stated that, it's, it's well within their control to be able to, basically contain the sell-offs and the breakdowns of these regional banks. So they're basically saying like, hey, we got their back and we can take care of this stuff. Now, maybe you believe them, maybe you don't, but the point is that the Fed is saying it, and maybe you got to believe them, all right? Because they basically do have unlimited money and unlimited resources to be able to backstop different industries, really. So so that's one thing, right? And then yesterday again, the Fed actually raised interest rates by 25 basis points. Okay. So that's right there. Okay. So they're further putting the pressure on the economy as well as the market, where they're saying, hey, we still believe that the economy is strong. We still believe that inflation is still a big persistent issue. And we think that the markets can handle further interest rate hikes. However, I think they also stated that they're going to pause or wait for the next hike, meaning they may not actually hike again. And the ECB this morning, okay, also raised interest rates. Okay. So the point is, let me see the latest, right? So ECB raised interest rates by 25 basis points, a seventh increase since July 2022, kind of similar to the Fed. The reference rate is right now between 3 3/4%. The United States is between 5 and 5/4%. Okay. So the central banks, especially the biggest banks that matter around the world, are hiking, which is the European one and the American one, right? This should tell you that they are still doing their best to keep a higher interest rate to bring down inflation, which to them is the biggest issue. And that means that, why does that matter to us? That means that they know inflation is still a big issue, and that markets, especially crypto, right? I mean, they're still doing okay. In fact, crypto to me seems a little bit more bullish up here, given that it's above this 2021 yearly open, which is around 29K. You can kind of see, even after the massive volatility and chop, BTC is still not like shitting the bed. It's like not nuking. In fact, it's just reclaimed this trend line right here that it had broken down from. This little trend line, let me make this a different color so y'all could see. Okay. See that pink trend line right there? It reclaimed that, and it reclaimed the 2021 yearly open. So all in all, it seems like, crypto markets are really not that concerned. Even the S&P 500, like I can see that KRE is breaking down, but SPX, NASDAQ, they're doing all right. I mean, they're holding up, right? Still above this trend line, breaking back inside this yellow one, so not so great, but still not a big breakdown or anything seen yet. So where does that put us? Well, that puts us in a unique area where, maybe markets are resilient, right? Maybe we can still go up in the face of interest rate hikes. Now, this is where I'll give you the caveat. I think that if the markets keep heading up higher, and at some point when the Fed and the ECB maybe start cutting, And that means like, they announced that, hey, we're going to start cutting interest rates by, I don't know, November, December this year, early next year. I think that will be the pivot point in the market, because what that will mean likely is, so let's go to, Jerome Powell, rate hike stop, or rate hike pause. Okay. So one thing that you need to know about the Fed is they react to things that are happening rather than, reacting in advance of things. Meaning they're not really so great at anticipating, what may happen much further down the road. They're usually kind of like, okay, if we see that we're already starting to break things and we anticipate a little bit that the breaking of things is going to get worse, then we'll pause our interest rate hikes, right? So what he said was, as expected, financial markets, but in doing so, dropped from its policy statement language, saying it anticipates further rate increases would be needed, right? So Jay Powell did say that it is possible that you may get further interest rate hikes. However, through some of the language, he also reiterated that we'll still take it like, 1 month at a time kind of thing. Meaning that if things really start to break, meaning if, equity markets start crapping the bed, or a big bank is about to fail, like a Bank of America or JP Morgan or whatever, which again, I don't foresee, if that happens, then these guys would pivot. And once they pivot or they announce a pivot, I would probably say with high certainty, then the market is topped. Because generally the Fed does not pivot. Okay. Most people think that, interest rates are going higher, so why does the market go down? Well, most of that was kind of priced in down here. The market is not going up, even, on the face of bad news. And it can keep doing that for a little while longer, right? I've talked about BTC potentially hitting 32K, maybe as high as 38K up here. I still think it's possible, okay, to go as high as 38, 40K. But if the Fed announces like, oh, hey guys, we're going to pause, or we're going to, stop hiking rates by October, November, December, something like that, I would probably say with higher certainty that the market is likely peaked or soon to peak, and then it's going to roll over, because that means that something is breaking and the Fed is truly concerned. And then the market will react very, very soon. The market will basically say, oh crap, we broke something, and we don't know the risk of the contagion, and we don't know how much financial stress or de-risking will happen. So let me just start selling off the market. And BTC can then go back to 25K or 20K or 15K. Some of these alts may go down, 20, 30, 50%, even from current prices. That is if the worst case scenario does come out and things do really start to break and the market is really concerned. And the Fed really does say, hey, guys, we're going to pause and pivot because we see things deteriorating rapidly, something along those lines. I would probably pay attention to ECB if you're in Europe. They would probably say the same thing. Right? The ECB is kind of dealing with their own crisis, which is more related to like real estate and mortgage crisis. America doesn't have that issue. We're more so connected with right now the banking crisis, which is obviously a big issue also. So all in all, as of right now, I'll be honest, I am not necessarily that concerned in terms of, the market like breaking down. I think that it is possible for BTC and some cryptos to probably go up further. Okay. I will say that I'm not like gig along or anything. I try to take opportunities here and there. I'm long BTC right now. I took on spot positions, averaged in, 22 and some change, right? So I'm like, yeah, I'm doing decent. It's not, make it or break it kind of situation where I'm all in. But, you want to be concerned and aware that, yes, the markets can go down further, and, maybe another 20, 30, 40% haircut on some of these alts is possible. Okay. So that situation I'm very well aware of, and I have kind of planned for that by still having cash on the side to be able to buy. Okay. Other than that, still taking it day to day, week to week on the markets, really not concerned, about anything else, about new bull market starting or any of that kind of crap. I'm just sitting tight. All right. Here's a really good podcast that I'm listening to, which is, about crypto and the crossroads of crypto and AI. This is again on the Good Game podcast. I really like these guys, Imran and Chow. They have a really great, insight on markets as well as developments in the crypto space. So yeah, make sure y'all check it out. And then other than that, right? Let me see here. Talked about BTC, right? Maintaining above 2021 yearly open is bullish. I personally think it is. OpenSea exec Nate Chastain found guilty. Thank God, right? I mean, it seems like our crypto space has been dealing with so many scams and frauds and, these hucksters that have been just stealing money left and right. Like, there's really no accountability. It's kind of sad. LTC is another one that you want to be watching because I think the halving is coming up shortly. And I think LTC is one of those assets where, honestly, like I think LTC is pretty damn good at marking market tops, like as a whole. So if you think that, LTC from here prior to the halving is going to go up up to this level, which is around, 165, 170, or maybe as high as 200 and some change. And again, I know it's kind of ridiculous to start talking about those numbers, but if you do think it will go up to those numbers, then, this is a pretty solid risk to reward trade, right? You're risking about 17, 18% around a 74, 73 stop to a target of 165, 170. Same thing with the 200% target profit, which is about 270 target. I don't have a trade. I don't have a dog in this race. So just letting you guys know just my general thoughts, okay? Non-investment advice. Other than that, I think most altcoins really don't look great, to be completely honest. Like, they look very shaky at these levels, like sitting at the lows. Like Fetch doesn't look good. Ocean doesn't look good. These are all the AI coins that were really, really hot at the beginning of the year because of the AI craze. They kind of died off. Same thing with, APT, right? It went up like 500%. It's just been bleeding since then. What else? Render is probably the only one that looks really strong, but even then, this is kind of like, this might be like I don't know, could start becoming a deviation if it fails back inside this high, right? So that's cause for concern. And then, of course, the stronger altcoins like ETH, they also look very shaky here. We really need to put in a rocket on ETH, and then we could start talking about, 2250 and maybe 2500 up here for ETH prices. Until then, this is very shaky ground for ETH. Okay. All right. That's pretty much all I have. If y'all like this video, this content, hit the thumbs up. Come join our Discord. The link is below. Take care. Cheers.